right, good afternoon, everyone. Scott Henderson Shooter, and we are going to go over some charts. Try and have a little fun with this today. I have a huge list, so let's jump right into it. Of course, at the end of our presentation, please do review our disclosure. Let's start right off and look at the S&P 500 via the SPY. Now, my map here, and realize I'm being conservative on the upside. And there were a number of investment banks in the last 24 hours that have called for a significant melt up into the first quarter. And I'm not going to say that is the case. Obviously, like anything, nothing's ever guaranteed when it comes down to markets, but I tend to see the same thing in the flow and where I see the block and the split orders getting positioned. And it doesn't take a lot. This morning's move was a good example of how flow just came in right from the open. And that really was the first day in 2026 where I saw what I would classify as a normal flow with a grind to the upside, like they're trying to build back to the upside. So I'm going to come in and just drop in just for this particular purpose. I'm going to draw in the Bollinger Bands here. And notice how we're squeezing here, but yet they're still quite far apart. So the internals are telling me we have the likelihood for a pullback. The question is whether or not we get enough FOMO to invalidate that. And that really is sort of a thought that I have here. So my mindset is in two camps for the markets. One, we head towards a blow off top around the 1618, which is acting like a magnet right now. And you can tell really this entire place how thin that tape is and even how shallow this drawdown. I mean, if we come in and just bring in a basic fib tool and look at that, it's extremely shallow. Just looking from that percentage. We didn't even come out and take out the 23.6 on a retracement if we consider this to be our whole leg. So that, my mindset is this still is a conservative view. And the reason is because we haven't resumed this elevated price slope. We're still meandering. We're still trying to decide which direction we want to go in. But there would be nothing that would prohibit this from, getting back up to these highs by March. Which is fairly aggressive from where we are now. We don't need a lot of sectors to join the party. One of the areas that pretty much in all cases where we have a huge rally, like for example, oil joined here, consumer staples joined here. And right now, oil's not joined the party here. So I think that's one thing that we'll need to join here. I still think the head and shoulders is viable. This is like the ideal stop run right here up around the third standard deviation. But if you notice through this entire leg here, we haven't really gotten above the second standard deviation. So it's likely that we skirt the high side here and continue to do a slow grind, more like what we're doing here, if we don't get any kind of a pullback. Now, let me jump over to the NASDAQ and just somebody give me a 5x5. You can see my chart, right? Yep, perfect. So now the NASDAQ is actually not anywhere near as bullish as the S&P 500. However, it definitely is more impulsive just by the breadth of the candles that we're seeing there. And we're now testing, this body of this candle on the breakout before we got that rejection candle. So, we break out above this. Either we're going to push pretty aggressively and realize the spread between the Bollinger Bands is much broader. It's a bigger squeeze going on there. So I see much more upside potentially in the NASDAQ if some names like Netflix, etc., stay on the bullish side. We start seeing some flow back into that. But we also have some divergence that's occurring here, right here on our price point as far as our highs. So, the NASDAQ is questionable as far as I'm concerned, whether it's going to join that party or not. So, and the same case is for IWM as well. So now we have a bunch of names to cover. I'm just going to try and run through what I see here. All right, let's start off with ADUR. Now, this was a name we threw into this morning. Actually, I'm going to leave the Bollinger Bands up for today because I see no reason not to. So, we hit our buyer demand zone, popped off it, gave us a gap, and now we're putting in a nice green weekly candle. I would think this continues up to at least 14. If we're going to reject, it'll be somewhere shallow of 14, but I don't think that's the case. If we look at the larger structure here, this is mound 1, so we're expecting mound 2. So it's got a lot of upside right here. This is the kind of trade right right now with how elevated tech is, that to me, the risk reward, that's just my mindset and how I'm looking at this market here. I want deep risk reward. I want a 4-to-1 plus risk reward in the trade that I put on, because ultimately it's going to offset the break evens and the losses if I'm wrong. That's the scenario. So all I really need is one ONDS out of 5 trades, and then, another 30 or 40% of mediocre trades. And, it balances the book where we end up on the upside towards 30%. But that's the look for ADUR. Now, AST Space Mall, we got a downgrade. I'm thinking it was Bank of America, and they lowered the price, but we wicked off a little bit on that today. I'm not touching it because of the breadth of the Bollinger Bands. I'm just going to sit there and let it ride. So I'm thinking that 116 target is still viable. I expect it to be noisy though. That's just my mindset. All right, now BABA, it's actually hit our first signs of failure here. It closes below this 145.90. I would close any positions that I have. Then we're going to continue to the downside. Bollinger Bands are extremely noisy here. However, I do still think that China pumps a large chunk of money in there to try and stimulate the economy in January, because they've done that every single year, just about. All right, now ESOSE, ESOS, I guess how you pronounce it, EOS Energy Enterprises, whatever it is. Nice pop off of our entry. We got a little rejection right where we should have at the sell side imbalance that is roughly right here. This breath here. So, I'd expect it to digest a little bit and then continue up for our 3 to around 17. But right now it's done nothing wrong. OKLO, nice pushing candle here, nice aggressive. This is going to be another emotional one, but I like it to the upside if you look at the count. Nice push back to the upside. We're in mound 1, building out mound 3. And now these wave 3s are the ones that I'm spending a lot of work on, trying to catch early this year and then hopefully be able to ride them through the first, second quarter as they head back towards the high. Now, Planet Labs just has popped here. I've got a new count that I put up this morning when I was looking at it, because my original count, I was thinking that maybe we extended to this 22. Then I came back and looked at the structure and drilled down the structure. I'm like, well, it sure looks like that's going to be a continued impulsive wave. And this looks to me like, this is drive 1. So drive 3 would be at least that distance or more. So that wave 3 could cleanly push to the 1618. It's done nothing wrong. Most of the tapes that I'm seeing now on wave 3 are shallow of the 1618, and then we complete with sort of a rolling 5. Seems to be the MO of a lot of different tapes, so that's sort of my mindset here. But at this point, it's done nothing wrong. Now, Rocket Labs, I suggested that, I like the bull call spread, which I posted in chat, simply because, this is getting busy here. We now broke out above the highs, back tested it, wicked off, had decent sellers come in and decent buyer exhaustion that occurred. Didn't even close with the body of the candle below our last general, which is extremely bullish in my view. So now the count that I see on this, I'm seeing a measured move where 5 becomes our longest wave just because of the euphoria in this slope. Right here, looks really aggressive back to the upside. Notice how the Bollinger Bands are expanding, broadening, so that means, definite dominance coming into the tape as far as volume back to the upside. So I look for continuation in Rocket, or SMR, excuse me. A $20 call, simply because I think this moves. In my thesis in metals and mining, going into AI infrastructure, and that whole thesis is, or a chunk of it is the 44 gigawatts of power that we are short for the planned AI expansion, the new data centers they're built. So almost none of them have a source of power yet. So that's going to have to come in from somewhere. And, SMR is someone I believe that'll benefit from it. It's had a nice drawdown, there was an $80 billion pumped by the U.S. government in trying to accelerate nuclear. So this is just one of the names that caught my radar. I like the fact the gap held, solid candle, not as bullish I'd like. For me, it doesn't really confirm the trend change till it's above 23.32. And then, of course, failure would occur on anything below about $14. And you'll note I'm starting to put that on the charts. And my mindset here is it's not necessarily a stop. It's that, hey, we want to regroup and really look at the tape. And, because realize it's the second drive on the floor. So it's an XABC pattern. Any XABC pattern can become a 3 drive, but that does not invalidate or change the upside. So even if it does flush back down here, a majority of these figs or the shell fib are still intact. All right, ONDS, which everybody wants to hear about. All right, so again, this was mound one. I mean, we could have gotten a little better entry. I'd rather about 750 versus the 830 that I was in at. But we just got a great entry on this. I'm looking for a target of 1966, and then I expect a little pullback. Notice how the Bollinger Bands are rolling over and broadening. So, it's all the technical support, a decent move here. I'm looking at this from a confirming trend support with an anchor at 57 cents and 964. I'm giving it some room. I'm not going to touch that in any way because I think be very candid. I can see $100 on this thing. I mean, just with how big the drone pump is going and what China just did. I don't know if anybody saw that air show with the drones. Absolutely a magnificent attempt. The government or Trump is going to see that. And he's going to figure out how to put billions of dollars more into drone, because I can't imagine that he sits on the sideline and lets China outperform us that way. So I think that's a benefactor. Now, FCX is one name that I have on related to the metals. I'm getting a little toppy here. It's a good spot to reject. Now, I don't see it because of the broadening of the Bollinger Bands, because it's not getting that squeeze where it's going to break down. It looks to me like it's accelerating. And this is one heck of a euphoric slope. It's more aggressive than these other slopes. It's even more aggressive than this slope, ultimately because that ended. And, FCX has some decent exposure, especially to copper. And I'm not sure who's going to go in and do the mining in Venezuela, but realize that's going to be an entire sector that has, the rare earth minerals that are there is just going to be a huge piece. So some of the big players are the most likely candidates to come into that. All right, BMY is actually just working. I'm looking for a target up there around 74. Now I'm looking at it as a shallow 5 structurally, but notice how the broadening came out in the Bollinger Bands, the count and everything that's there. I think it's a pretty solid count there back to the upside. So, there again, we're just trying to hold into Intrepid Potash. It's getting a little noisy here. Hasn't really broken above what I'm considering as my trend resistance that I wanted to break out of. To me, it doesn't really have that bullish trend change till we're back at 32. But this is another commodity play that I'm fairly comfortable with, this kind of a drawdown, that we're going to get back to 50% of the move. So worst case scenario, I'm thinking $32. Count wise, and I need to go out a little bit further, is because it's a huge impulse wave that we're measuring out here just because of the breadth here. So our 3 is up at $54 on it after this kind of a drawdown. So, I don't know if you see the MO of the stocks or where I'm going. I'm looking for these corrective legs that have found the floor, have put in a decent higher low or consistent higher lows, and we're holding this. You know where the numbers are. So we're in at a good spot to take a shot back at the highs on that little leg. So if it's only $10, it's only $10. That's what it is. All right, now UPS is working. And, another scenario, notice how that pullback came all the way in. We now are just testing what I consider to be the trend change of, the first lower high that we crossed, and then obviously stair cat and impulse. But that's a nice impulsive move off of that floor. We're going to find out whether it's a dead cat bounce fairly soon. Bollinger Bands haven't turned, but it definitely looks in that direction. MOS has not really moved yet, sort of stuck right there, but not changing anything at this point because I think it's going to ultimately end up working. Anytime we have these kind of completions, where we have the flushing drives on A and peaking drives, even though they're shallow and trendy here, they're still there, visible. Almost always it's going to return back to the upside. So as far as a trend change, we got to get above 38. Now, MLBY is really not working yet. Back to the weekly chart. However, we keep trying, so I think it gets back out. So I'm just looking at this as building the base, kind of an overshoot, drive 1, drive 2, and drive 3 can always be an overshoot. So that's what I'm looking at. Structurally, I like the trade just because of this drawdown and how this structure looks. I think we get back above this $22 at some point. First or second quarter is my thought. All right, BX, awful noisy right here. I mean, we can end up in this XABC pattern. It could just, look something like this, or we'd be like this for a while. So I'm not touching that yet. I've got a smaller piece on that one at this point, but just sort of letting it roll. NTR, we got a decent rejection candle. It's none of my triggers have triggered as far as an exit, right? If we go down to the 4-hour, well, actually it has triggered an exit. So I'm going to be closing that one shortly because I didn't get the alert on that for whatever reason. Come back to the daily on Morningstar. Again, we're just building out this base. Again, another corrective leg where we've put in the higher lows consistently. I like these structures where we constantly are doing this slow grind because what we're doing is building that base for a launching pad. And then, we're going to head back towards resistance at some point because that's ultimately what that chart pattern does. All right, now John Deere is, I don't know, I guess it's a U.S. hope trade. Because at this point, it's looking like it wants to get out, but we keep rejecting. And, this is one of those names that, the generals in our economy, DE is one of them that has to recover. Otherwise, we're going to end up slowing down to some degree. So we're just going to continue to roll with that position that I have there. I'm not anywhere near a stop on it. I am down a little bit on it. I think I'm down about 7% or something on it. Okay, let's take a look at ELF. Now, ELF is trying. I mean, really trying. Once it gets back in that gap, I think it'll run at least halfway. Back to about 105. So again, we're just sitting there in that position, holding it. It's working, but not too aggressively. Now, Cisco is rejecting here a little bit. It's into the gap. Unless it closes below this 72.54, I'm going to hang tight with it because I think this is a big benefactor from AI infrastructure. And the crazy part now is a lot of the names in AI are getting challenging because you can see the rotation out of them because we're now recognizing that we have that 44 gigawatt problem as far as power. So the question is, do they slow down the builds rather than just pumping the CapEx in there right now, or do they wait until they have power or a timeline for power? That's sort of the noise that I'm hearing in the market. But, Cisco is core to, especially with the uplinks. As far as bandwidth, they're just essential there. So, again, my thought is we head back towards this 1618. All right. American Semiconductor, it's trying, it's not getting out. Again, same scenario. We're sort of in that flat. I saw no reason to cut it. Numbers still look good as far as the total P&L. Now, BBAI, I'm holding a very small piece. I closed out the bulk of it. I still like the thesis. I think it gets back and tests these highs, second quarter maybe. All right, so let's jump in and go to some names that were requested. IMSR, beautiful look, by the way. Nice completion. Needs to get back above this sell side imbalance here, which is this last flush. And we got another sell side imbalance up here at 14. Another one up here about 17. So it's got a hard grind coming back with this kind of flush. This may hold. This is one name that could be a dead cat bounce, but for the moment, I'm looking at it. Yeah, it's probably worth a piece, but I wouldn't go too large. All right, now, SMH, I see it pushing to just shy of the 1618, maybe to about 417, and then we should get a decent pullback. But I think ultimately it does push back towards about 435, probably the later part of second quarter, because this is a slow meandering one. It's not as, because there's so many components in there. All right, NNE, did I get that name right? I think I did. It's the energy one. Okay, so it looks pretty good. Looks like a dead cat bounce, to be candid with you. I think it rejects here. And part of the reason is because of how it's an ending diagonal. So quite often what we end up with is flat here after an ending diagonal and that kind of a move. So, it would be something that would look like this. And, so we'll build out, get a little bit of a rejection first. So the back test, the solid back test, and what I mean by back test is, let's just assume this is our leg, right? We really want to retrace back to at least the 382 fib around $29. So back at $29, I like it better for a shot there, simply because of the way that look, or the way the count look. All right, so RXX, just double checking, making sure my screen's here. I think that's the same kind of similar flat here. And it's just because it doesn't look done. It's not, we had this impulse down, which seems out of place to me. I mean, we went right down. So technically it went right to the low. So it's got a double bottom. However, we keep seeing this price rejection direction as it's pushing, which it likes to do, by the way, it likes to do. But what's clear is it likes to back test the lows. So I would think that we come back and test this 435 again, and it may test the floor at $4, but that's my thought. DPRO, nice look actually. Now notice the difference in my view here, and the reason is because we broke out above this high, right? Put in a new high, which happened to be at this prior high, right? Rejected, back tested, held the higher low, right? Now we broke cleanly above that. So the next test is going to be wherever we get up here, and then the back test of this shelf right here at roughly that 851. That will tell us. That's where we have some conviction that we're going to continue to the upside and head back towards the 618. All right, Lunar's it's working. It's just going. It's going to go up to about $24. That's where that's headed. Look at the breadth in the Bollinger Bands. Just a beautiful thing. I mean, it's just a beautiful thing. All right, let's look at Pfizer. And, this is a name who's sort of stuck. It's got a shot to get out, but this is another WXYZ kind of look, ABC, whatever we want to call it, as far as the corrective pattern. So the question is, do we get another one? Do we get a flat? I mean, we won't know that. This rejection's pretty solid. That's institutions sold on that candle. Institutions sold on this candle. I don't know that we get another push like this over here yet. And the reason is, if you look at the breadth from this low to this low, it's what? September of 25, April of 25. So, we probably could stay in this flat out to late February, and then maybe it's got a shot. So I think it has a little more time. AIRO actually look real constructive here. Now, ironically, I went and looked at the cash secured puts on this one. The $15 cash secured put is paying $5.90 a contract. So that puts your cost basis at $9.10, assuming that this was our low, which isn't a bad deal. As far as the structure, you don't see the graph any good. You see it now, John? Okay. So, I went and looked at those cash secured puts. That's not a bad deal on this name, because if it gets back up above, the challenging part about, how I feel about small cap, this is trading over $10. So the institutions will look at it. Whenever we're trading below that number, so when this thing drops below $10, the institutional investors won't buy it. So if it breaks below there, I would probably lose interest simply because of the macro that I see there. Unless they're, be very candid, I don't know Kirk's catalyst on this. I haven't read that. I look at a stock totally from a technical standpoint. But those July $15 cash secured puts actually made a lot of sense to me here because it gave you less exposure than if you just bought common shares here at $11. So your cost basis would be down to about $9.10 if you ended up having to buy those stocks or buy those shares at that. All right, Geo is kind of complaining here a little bit, but it's still done nothing wrong. It's building out that base. We've definitely getting tight on the squeeze. It's definitely near a completion. So I would expect to get some kind of pop here. Now, whether that's going to be strong enough to get us back up to the 618, only time will tell. But I still like the look on this. Again, that same scenario. We've had that nice solid drawdown, putting in a base. Came a little bit below because I was looking at this as our higher low. Still hasn't invalidated it though. You look at the wick off there. Still looks pretty solid. All right, CIEN, little toppy, even, on the look. I'm looking at maybe a 3 here, and I'm going to come out to the weekly on this one because that's a pretty steep 3. And the question is this 1 or is this 1? So if this is 1, then I'm real shallow. It'll be up here. If this is 1, this is what we'll get. Something like is my thought. So it really depends on whether this is 1 or that's 1. And you never know till the wave's done. You can have a balanced opinion. The one thing that I see here is we confirmed on this high and we're diverging here. So it falls into the category of an XABC pattern, which could be pretty aggressive, to the downside. It could measure back. So you want to mind your stops for sure, because it could be pretty aggressive to the down. Now, Shake is still working. As a matter of fact, there's a lot of names. I had a number of different names on this, and I closed them all out coming out of Christmas, just because it looked like it was flattening out. And, it's just like right now, I really want to raise cash because I want pullbacks, and I want to shift to my infrastructure and metal thesis as soon as I'm able to shift in that direction and start building those positions. I still think, and there's a number of people analysts that are calling for a recovery on middle class spending coming out of the holidays. And that's very viable. I mean, you realize 618 on this is back up at 120 bucks. So we get any kind of decent numbers, realize we have earnings that start coming in. We'll know in the first couple of weeks of earnings this cycle how well restaurants are going to do, and it'll tell us whether or not we want to add. But in my view, we don't get a trend change on this name until we cross this 97, whatever that is. As far as, wrong name, as far as a trend change back to the bullish side. All right, let's look at TE. Little toppy here. First band of resistance we're at, it's rejecting that a little bit. And I'm basically measuring this sell side imbalance here. And then the next steep sell side imbalance comes in here at 12. So, we got a little overhead resistance here. I would expect it to reject and we get a full ABC somewhere around that $12. So just mind that, so the ABC will be pretty significant here. It should be something like that comes in. So it should come back and test $7, roughly right about where we are now. All right, PLPC looks a little toppy. Let me go out to the monthly here on this one. We've also got rejection candles on wicks, 2 of them right in a row. Pretty aggressive rejection on seller exhaustion, though we've gotten them in a few other places midstream. However, a few of the wicks were the ends. So there's a good possibility that we're done here. Confirming trend support, you could anchor it here at this 183.98. Breaks that, then I would probably cut and run. But that's pretty much what I've got for today, folks. Let me just look. AMT. I was wondering where your list was. All right. American Tower. Come back to the weekly and see what the chart tells us. And it'd help if I had it in US dollars. I don't know. I got a setting somewhere. Is that right? No, we're going to have to be American Tower Corp. Now, if I need the NASDAQ version, all AMT, American Tower Corp. There it is. All right. MACD's crossing. It's actually a good spot. Boy, that's a hard leg to read. Hold on, I'm drawing it. It's a hard leg. It's definitely a trend down. I don't know if I got the right tool up there. Likes to double tag the Bollinger Bands. It's only really tagged it once here on that lower side. Does like to cross the third standard deviation consistently on the downside on the more aggressive flush. So obviously if we get a push to that third standard deviation, that's probably your optimal spot. But to be candid, looking at the way the RSI structure there is, don't have the, I like these flushing peaks. See how that peak is there versus here? And notice how we came off of that peak and we can come back and you look at pretty much all those deep peaks. We have nice pushback after those peaks. So just looking at the MO of the tape, I'd rather have a peak in RSI. Otherwise, this is probably still going to slow bleed. Let me see where our band is over here. Okay, so we have a pretty significant sell side imbalance down there. We have a little buy side imbalance above there. So yeah, I'm going to just broaden that and say, so that is our band. I like it better at 148 here. Overshoot of this low. This is your confirming low. We had a higher RSI here. So this is a divergent. I would think that we get a third one with this kind of rejection, with this look. I would think. I changed my color so I can see there. Put a fib up there just want to see. Below the 78.6. So the fact is it opens up the next golden box, closed below there on the weekly. So it's viable for one leg lower down here. I like it better around 144. All right, great. Any other questions, folks? Perfect. We're going to call it a day then. Hopefully everybody enjoyed this. Great trading. Until next time.